Hey, we're live. Okay, guys, we got it figured out. Appreciate the patience. Can you guys all hear us good? Is everything good to go? Just gotta get Dimitri on. Can you guys hear us? Hey, Dimitri, we're good, bro. It says it's broadcasting and everything's live.
Okay, awesome. Can everyone hear us?
Let me see. Let's just do a double check real quick. There's 16
I think
people.
everyone can hear us.
Yeah, it looks good. It's broadcasting.
Can everyone hear us? Can we just get some confirmation that you guys can hear us?
Yes, things are good.
Awesome. So should I just start the webinar?
Yeah, go ahead, man. Just turn your camera on and we're good to go. So
Okay, cool.
Here, actually, let me start it off and let me kind of break down how I know you and why we're on this webinar. Then you can just take it away and crush it, bro. So welcome, everyone, to the Founders Legacy Forex Oil Kingz Edition webinar. My name is Darren Fryer. I'm coming at you guys from Hawaii, and it's a pleasure and it's a privilege to be able to introduce to you guys Dimitri Tucker. Before I let him take it away and crush some Forex training for you guys, I want to kind of drop a little bit of a background about how I know Dimitri. So that way, here, let me hold on. Okay. So that way, I just temporarily muted you, Dimitri, and then I'll let you go. So, how do I know Dimitri? So I met him through our previous business, Wake Up Now. He joined our team, and I was hanging out with him in New York City. And it was just crazy because over a year ago, he was talking to me about Forex, mentioning how he was mentoring. He was getting mentored by a 9-figure earner who trades foreign currencies. And it's just one of those things that kind of went over my head. And I never really thought too much about it. But then looking back at it, I was like, damn, that is so smart because he learned an independent skill set that's making him money without having to rely on a company or a CEO. You rely on no one but yourself. So it's so powerful to see what he's been able to do by taking this skill set and mastering it and, basically growing it to an amazing income. And now he's able to jump on and teach us the same thing. So I wanted Dimitri to come on here and teach you guys the 101 basics of Forex, a little bit about risk management, and just whatever he wants to cover that will provide you guys value as being independent traders, as people who are just starting, because he was just starting this industry probably a couple years ago. And, so he knows where we are all at. I'm still new, so I'm learning with you guys, so I'm excited to be on. So that's really it, man. Take it away, Dimitri. Let me unmute you. Okay, there you go.
Okay, cool. Hey guys, how's it going? Can you guys see me or not? I think it's my camera.
Now your camera's off.
See if I can. Yeah, I just talk for now. And then see
okay.
If I can fix
yeah,
it
remember.
How's it going, guys?
Oh, go ahead, bro.
How's it going, guys? My name is Dimitri Tucker. I'm 22 years old, and just amazing meeting Darren and teaming up with him, and never thought that I would meet anyone who is 22 years old making a 6-figure income. Literally blew my mind, just how he was able to just build his business. So it's a pleasure to just definitely work with him now on Forex trading. I never thought that we would actually end up partnering up in this, and he really inspired me to just let me know that law of attraction is totally real. And we were just talking about it in the hotel when I was meeting him, and I'm just like, yeah, how do you attract all these different things to you? How do you make 6 figures? And a couple months down the line, a year passed by, I ended up becoming a 6-figure Forex trader, teaching and mentoring people and guiding them, on how to make money in the markets. And it's literally been just amazing. Lately I've been trading oil, as you guys can see, and absolutely crushing it. So I'm going to get into details about oil too as well, as Forex, but both are really super powerful. And if you guys just learn how to trade the markets in general, you will become profitable. It's about learning a skill that's going to make you profitable for the rest of your life. And don't even think that, you have to just cater to my trading style. If you find something that works for you, use what works for you, because trading is kind of like Kung Fu. You know what I mean? Not every Kung Fu fighting style is all the same. Jiu-jitsu, Muay Thai, You know what I mean? There's all different kinds of karate styles, and it's pretty much on how you approach the market. You know, Jackie Chan and Bruce Lee, they both fight differently, but at the same time, they could both kick ass, right? And that's what I'm trying to get you guys to do, is really kick ass in the market and, you know, just take your trading to the next level. Because, I mean, not only are you guys just going to make money from recruiting, but you guys are going to make money from the product itself, which is literally insane. So you're able to multiply your income with, you know, the skills that I'm going to teach you, and looking at the market from a different perspective. It's all about perspective and what you see, guys. So I'm going to show you my chart and pretty much like how I analyze a chart with just like basic price action. So you guys can get an idea of Forex as a whole, and you're more knowledgeable on the market. So when you talk to people about wealth generators, when you talk to people about the business, they're going to ask you, hey, what is Forex? They're going to ask you different questions. And as a professional, you should be able to answer those questions, you know, back to back. You don't have to know every single thing about Forex, but no, you got to know enough to help other people make money and understand the industry as a whole. And it's literally an amazing industry. So when you guys see the stuff I'm going to tell you, it's going to absolutely blow your mind. So let's pretty much just get into it. Show you guys to my chart. Okay. Boom. Let's see. Awesome. Okay. Cool. Can you guys see my chart? Just let me know if you guys can see my chart. Just put yes in the chat room. Everything's all good, Darren? Can they see my chart? Can you see my chart?
No, I don't see anything, bro. I think you need
How about
to.
Now?
Oh yeah,
Can you
now
see
I
it
see
now?
it. Yeah.
Okay, cool. What if I do it like this? Can you guys see it or not? Nope, right?
Yeah, now you're good. Okay, you're good, bro.
Okay, awesome. So right now, guys, we're looking at the Euro USD. And what you have to realize is when you're looking at the market, each and every single one of these candlesticks tell a story. You know, they're pretty much like people. And you see these candlesticks,
Hold on,
they come in different.
It's not up anymore. I don't see it.
Oh, it's not?
Okay, there it is.
Oh,
Now it is. Now you're good.
Oh, that's so weird. Okay, I don't know. But pretty much, you know, the market essentially tells a story, and every single one of these candlesticks, they're pretty much like people. You know, some people are big, some people are small, some people are fat, some people are skinny, some people are thin, just like these candlesticks. And, you know, the greatest thing that I've ever learned from my mentor is that if the market is telling a story and you don't listen to it, how do you expect to make money? It's kind of like, you know, if someone's talking and then you just talk over them, how do you ever expect to get to know what they're actually talking about if you don't give them a chance to finish their sentence? Now, the thing about it is it's different from than a human. You know, you could talk over somebody and they may be pissed off, but you could talk to the market and not listen and it will humble you. And I've been humbled so many times. So I've just taken the time to, you know, control the most important factor in trading, which is your emotion. Okay. And when you guys take trades out of emotion, realize that you're not really trading, you're gambling. But when you take trades out of logic, what makes sense, now you're actually trading. Because it's not about really what you feel, it's about what's right and what's wrong. You know what I mean? The market doesn't really care how you feel. It has no feelings for you. You trying to say, you know, please go up, price, please go up, price, please go down. It's kind of like yelling at a tornado saying, please don't hit my house. If it wants to hit your house, it's going to hit your house regardless. And that's how the market pretty much works. It's ruthless, but if you can master it, you can definitely make a lot of money. So each and every single one of these candlesticks right now represent a time interval. And I'm going to get into the different types of candlesticks because there's time-based bars and there's a non-time-based bars. Sorry, that was my windows. And there's non-time-based bars that don't use time, okay? Now, we're on a 5-minute time interval for the Euro USD, okay? And each and every one of these candlesticks represent a time interval of 5 minutes. So if you were to go to this candlestick, okay? This is 5, 10, 15, 20, 25, 30, 35. So this is a 35-minute move in the market as a whole, right? Now, let's say you go to the 1-minute chart, okay? Switch to the 1 minute. Notice the 1 minute moves a lot faster. It shows a lot more trends. That's because it's a lot quicker. Each and every single candlestick here represents a time interval of 60 seconds. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 minutes in the market. You know, you can keep going all the way up to 20 to 30 to 40 to 50. Now, the 1 minute chart is good for scalping. Now, what is scalping? A lot of people ask me that question. What is scalping? Scalping is pretty much when, you know, you're holding a security for a short amount of time. And that security could be an option. It could be, you know, stocks. It could be futures. It could be anything. It could be oil. It could be Forex. But you're holding it for a short amount of time, which means that you're not holding it longer than 5 minutes. Anything longer than 5 minutes, like, you know, a 15-minute trade wouldn't be considered a scalp. A scalp is pretty much you get in and then you get out. Okay. So from here, let's say you just took a buy here. 1, 2, 3, 4, 5. This would be a quick scalp because it represents each time interval as a time interval of 60 seconds. So these 5 candlesticks would represent 5 minutes. So you would probably get out here on your trade. Okay. Now, when you go to the 5 minute, the candlesticks represent 5 minutes. Now, instead of doing on the 1 minute chart, you see how each candlestick is going to represent 1 minute. Instead of counting 5 minutes, instead of counting 5 candlesticks, you could just go to the 5 minute and then count one candlestick. That one candlestick will represent all those 5 candlesticks that you counted in one time interval. Okay. And the reason why it's so good to trade on longer time frames is because slow motion shows more of actually what's happening. If you guys want to see what the market is doing, like I said, it tells a story. So you have to give it time to play out. So what I usually trade on is, you know, I could trade on any time frame, but me personally, you know, I'll trade on the 5 minute. I'll scalp on the 1 minute too as well, depending on what I'm doing. But as far as sticking to the true trend, you want to stick around the 30-minute chart and the hour chart. Okay, those are going to tell you the true trends. And if you want to catch the big pips, they're in the 4-hour chart. Okay. Not saying you can't catch big pips off the other charts, but you know, 4-hour chart is where you could catch the most pips. Okay. Now let's say you're on an hour chart, right? Sorry, not an hour chart. Let's say you're on a 15-minute chart, right? Switch to the 15. Hold on a second. 5. Just go to the 30. Okay, yeah, this is better. Whatever, we're on the 30. Let's just say you're on the 30 chart. All right, this is 30, this is 30, okay? This is a time interval of 30 minutes for each candlestick. So this shows you a whole hour, okay, because 30 and 30 is 60. So this is a whole hour of what price did. Now, if you want to look at that in just one candlestick, you just go to the 1-hour chart and see what price did for that 1 hour. This represents that price was up for 1 hour. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you could have took this trade for 10 hours and would have caught hella pips up here because the market essentially moved up for 10 hours. So imagine just getting in at this position and then taking a buy and the whole letting it, you know, you hold your security for longer than 5 minutes. This is a 10-hour trade. You would have definitely been in profit for here. And even if you stayed in here, you still would have been in profit because you got in here. Okay. Now, that's what, you know, happens for time. Okay. As far as time goes. Now let's talk a little bit about entries. Okay. Well, actually, I want to go back to time because I didn't finish touching up on what I actually said. Now, the reason why you guys want to trade on a lower time frame, on a higher time frame, is just because you give price more time to play out. Price action, more time to play out. So it shows you the true trend of actually what's happening in the market. Rather, if you go on here, you know, you go on the 1 minute, it's all over the place. You know what I mean? You can't really catch where the market is going. It's like trying to chase 2 rabbits. You know, you're not going to catch either one. But when you go on the 1 hour, you know, you're able to see, okay, price is up here. Okay. And it's going to go for a reversal. And on the 1 minute, you see price is already down here and it's coming back up. But on the hour, it already shows you everything that's truly happening. It shows you the true trend of the market, of what's actually happening. So that way you could, you know, see what's happening. You could play out more what's happening. So think about it this way. Let's say you're playing 2K. You know, I'm sure there's people that play 2K or basketball or people who's watched The Matrix. Let's say you're playing 2K and your friend is like, hey, yo, that was a foul. And you're like, no, it's not. And you go back into, you know, replaying what actually happened, you know, in slow motion, and you see, hey, you know, he fouled him on his arm, he fouled him on his leg, wherever it may be, and you get to see what's actually happening. It's the same thing with The Matrix. You know, when they're shooting at Neo and his body's moving in slow motion and he's moving back, you get to see where, you know, bullets actually hit him and hit him in his arm, hit him in his leg. It's really detailed. You know what I mean? And that's the same exact thing with the market. A little weird comparison, but it's the same exact thing essentially. Also, getting into true trends, guys. You guys are trading with candlesticks, okay? Now, do you guys notice the difference between the candlesticks that I just switched between candles and Hikadashi? Can you guys see the difference of that? Type it in, type it right here on the side, if you guys can see the difference. Yes, cool. You guys can see it? Cool. All right, great. Can they see everything, Darren? Everything thumbs up?
Yeah, I believe so. I just don't know if they're all chatting, but I mean, they're all
Okay, yeah. I'm just kidding. They can see it. Yeah, I see them typing. Okay, awesome. So, you know, you go on a Hikanashi, you go on the regular candlesticks, they're very choppy. You know what I mean? They're still great. You know, it's great to use candlesticks. You know, it's all trading is all personal preference, but it's great to use candlesticks. But for me, like, look how choppy this movement is. You know, you're not really getting a clear direction of where the market is going. Okay. But if you switch to Hikanashi candlesticks, oops, I'm sorry, not those. You could see a major difference, right? It shows you the true trend. So when you're trading, you don't get faked out in trades and you're not like, oh, you know, oh crap, what am I gonna do? You know, is it a buy or is it a sell? So do you see how like deceiving these regular candlesticks can actually be? Let's just do that one more time, okay? This is the exact same trend I was looking at. Okay, let's check it out. Why isn't it playing back? It's loading the data. Okay. This is the exact same trend that I was checking out. Do you see it? See how choppy it is? Now watch when you go to the Hikanashi candlesticks. Look at the major difference, because most people would see this and they'd be like, okay, I don't know if it's up, down, so you know what I mean? Because of the wicks, they're pulling back. But when you go to the Hikanashi, it just looks like, it looks like you're like, you know, you put on glasses and you're like, oh my God, I could finally see again. So it shows you the true trend. So these are the candlesticks that I trade with. I don't trade with regular candlesticks. I haven't traded with regular candlesticks in a long time. Hikanashi candlesticks are great because they're always going to show you the true trend in the market. So it takes out all the noise, so that way you're not confused when trading and you don't make, you know, a bad decision, because trading is all psychology. So you want to make the best possible trades. You want to make the best possible setups. So I encourage every single person on this webinar to use Hikanashi candlesticks. Okay. They will make your trading literally 70% better, like 70% more accuracy when you're entering the trades. Okay. Because they're just going to give you the true trend. Let's check that out. They're really consistent. They're not choppy. Now you guys can see the major difference. Like, it's just like a huge difference when you're trading on these candlesticks, okay? Boom, okay? Awesome. And there's different bar types that you can use. I didn't get like the 30-day subscription for this. So, you know, there's lines, there's line graph, but I don't use line graph personally. I'm going to tell you when I use line graph. It's not for like, you know, just figuring out the trend, but I use line graph for when I want to draw trend lines, because I can connect the points a lot more easier, because you could see the highs and lows in the market. But I'm going to get into that after, you know. So let's just say we make this regular candlesticks, you know, boom, boom, boom. Okay. Connecting trends like on point, you know what I mean? Boom, boom, boom. Okay. This trash. Okay, cool. Where was I? Okay, now you have lines. Okay, you have the area. You wouldn't be able to trade off of this at all. Okay, so don't do that. You have Renkos. Okay. Okay, no thank you. Okay, Renko bars, they're, which pretty cool, is they're kind of like Hikanashi candlesticks, but except, you know, they will plot a really true trend. But I personally don't use these Renko bars. There's different types of Renko bars. There's medium Renko bars and there's regular Renko bars, and then there's diagnostic bars, which I'm going to get into telling you. But it's good to know all these different things just so you can improve your trading. Doesn't really matter which one you use. It's all, like I said, guys, it's all personal preference. You don't have to use the bars that I'm using, but this is how I've been crushing it on oil. This is how I've just been crushing it, period. I'm just switching up my trading style, and, you know, using diagnostic bars and Hikanashi candlesticks have just pretty much taken my trading to the next level. So let's just go back to, I keep switching to hollow candles. Those are the ugliest candlesticks in the world. Okay. Now this is a day chart. So So each and every candlestick is going to represent a time interval of a day on here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The market was down for 10 days and then came back up on 1, 2, 3, 4, 5 days. What my prediction is, honestly, for this day chart is the market's going to come back here for a double top and then come back down for an M to form another M, which I'm going to get into as far as M's and W's when you're trading as well. Okay. So let's see right here. Man, look at the Euro USD. Like it just went down for days, like weeks. You know what I mean? Like this, if you got in this, like this trade right here, dude, you would have been solid. You could have had like one lot on here and just made like racks. Would have been awesome. Now let's go into M's and W's. Okay. So like I said, you know, the market essentially tells a story. So the coolest thing about the market is that it'll speak to you in its own kind of way. And M's and W's is a way that the market can speak to you. So let's check this out. Okay. You got a M, a slight M right here, but with the W, with the whipsaw right here. Okay. This trade would be called a double top and a double bottom. Okay. Now the double top is where price meets at the exact same line. They're like twins. It's like Mary Kate and Ashley. Okay. Two double barrels. But no, seriously though, where price meets at the top of resistance and then it shoots back down. That's when you know that this is a solid trade. So you could take this for a sell right here and catch it. And there's some times where people will just catch the W actually forming. So they'll come in and they'll catch the M right here, you know, and then they'll catch the W. So you zoom in, you can see that. So it's an M and a W. Okay, look at that M. Yeah, it's an M and a W right here. So boom. I would have personally got in here because I would have known this is going to form a W, you know, but what I like to do is personally, oh, hold on a second. How do you get this off? Oh man, I hate using this sometimes. What I like to do is for extra confirmation, just to make sure that it's a W coming up, you don't want to get in on this candlestick right here. So you don't want to be like, all right, cool, it's a W, it's a W, yay. And then, you know, sellers, you just get like capped out. Okay. What you want to do is you want to wait for confirmation. Now, what is confirmation? Confirmation is when you're waiting for another candlestick to appear to tell you obviously the true trend. And with Heikin-Ashi candlesticks, you using these Heikin-Ashi candlesticks, you can obviously see, you know, the true trend. Now let's look what it would look like without Heikin-Ashi candlesticks. Let's just see. See that? So, you know, you would have been like here, you'd be like, oh no, this isn't the true trend. And then it would have went up and then you would have sold probably. But now that you got the Heikin-Ashi candlesticks on deck, boom, you know, you're able to get out of this choppy movement. You know what I'm saying? It's not as choppy. I personally would have got in on the third bar right here, like with the fourth bar right here, okay? Reason why being, guys, is if you get in, and I'm going to show you how pretty valid this is, if you get in on the first, second, or third bar, and this bar is engulfing, right? An engulfing pattern, let me show you. An engulfing pattern is pretty much where it's engulfing all the other candlesticks. You know, the name is pretty straightforward. And if it engulfs four or more candlesticks, you could take that trade for a buy. So let's see, 1, 2, 3, 4, 5, 6. It engulfs 6 candlesticks. So look how valid this buy is. Boom. You could have took a buy right here. Most people would have saw this and freaked out, but this is also where like they trap contracts. So the price moves in consolidation. Consolidation means when price is moving sideways. So the market moves 3 ways. It moves up, it moves down, and it moves sideways. Okay. Here is a signal. This would have been a great signal trade to take. Okay. It had to cross. This is a doji. Now, for me, you know, my analogy, the way I think of this is the Jesus trade. Some people may be like, okay, that's too religious. But for me, SK, I would have saw this and I'm like, all right, now this is where there's going to be a turning point. Jesus is going to make a turning point in someone's life. Boom, you take the trade for a buy and you're in that trade. And it would be the same thing that would apply for the sell. Okay, so this is the turning point trade where you just take the trade for a buy. You would have got in here and you would have crushed this trade. But I mean, you would have got in here, I'm sorry, and then you would have crushed the trade, obviously, because you would have saw that it's going up. As long as it engulfs 5 or more candlesticks, right? It could be 4 too. 4 is a good amount, but I like to go for, 4 or 5. But 1, 2, 3, 4, 5, 6. right? 6 candlesticks, take that for a buy, it's valid. And I'm gonna show you how valid it is on other trends too as well, okay? So see the double top? Price meets at these 2 tops, boom, boom, okay? So here's where you would have got in. Let's say you didn't get in this entry right here. Let's say you would have got in the entry right here. You could have took this for a buy, price would have shot up. You would have waited for price to hit this line right here, okay, to form the double top. So now the double top is formed. And just to make sure it's not like a breakout, you know, a breakout trade is where it breaks out of this line and it's not going to shoot down. Just to make sure it's not a breakout, what you could do is wait for another candlestick for confirmation. So I would have personally got in at the end of this candlestick because I would have saw it's not going up. So boom. Or you could have got in here too as well. Either or. I personally, if you want to be more safe, you could have got in here at the bottom of this candlestick, because what is it doing? 1, 2, 3, 4, 5, 6. It's engulfing all these other candlesticks, right? Look at this. Even the wick counts too, okay? It's engulfing all these other candlesticks. So boom, sell. And you could have sold right here and just snagged a good 30 pips. And then price comes back up and hits the same level. What you have to realize is price is always going to hit these levels. Why? Because like you and me, we have memory, right? We can look at a picture book. We can look at, you know, an old Facebook message, and we could recall a time of, oh, I remember when this happened. I remember when that happened. I remember, you know, when I was 6 years old, or if you saw something that reminded you of, you know, when you went to see Lion King, you know what I mean? Oh, I remember when I went to go see Lion King. The market has the exact same thing. The market has a memory of these levels. So it will come back always and hit these levels, always. Not these specific levels, but levels just in general. It will come back up and hit certain levels in general. Even if it takes a year, if it takes a month, if it takes a day, a week, an hour, they always come back up and hit this level. So you see here in March, around March 16th, price came, shot down, okay? Another double top, guys. Look at this other double top right here, okay? Could have got in right here. Boop, solid. Another sell trade. But price came down here, March 16th, okay? Then around April, okay? This is the next month, guys. Price came all the way up and hit here on April. Hit here on May, I'm sorry. So skipped past April, went all the way to May, and then shot down into June. So see how the price has memory? It's always going to come back up to these levels. And then here, did the same thing, came up, shot back down. Here, it broke through. So buyers would have got faked out. I mean, you could have snagged some pips up here, personally. But buyers got faked out. Price hits here, it breaks down, and then it comes back up. And it's going to do the same thing. Come back up, break down. Come back up, break down. That's called technical analysis, guys, okay? So when you see this trade, when you see price bouncing off these levels, okay, get in on the third candlestick, the third or second candlestick for confirmation, and take your sell or buy. And, you know, you'll win majority of the time. I won't say you win every time, you know, because nothing is ever guaranteed, but you'll win majority of the time, and you'll increase your probability chances of winning, because not only are you respecting the market, but you're waiting for the market on a longer time frame too as well. So you're waiting for better setups to happen. If you're in a 1 minute chart, you know, this shit might just spaz out and be up, down, up, down, up, down. But the more time you give it, the more you can see it playing out. So here, what you could have had a couple solid trades. If you just pretend we're on an hour chart, boom, snag like a good 30 pips there, a good 30 pips here, 40 pips here. You know what I mean? That's like $1,000 in a day, guys, off off a couple good trades. You know what I mean? And especially using risk management, which I'm going to get into after. Okay. Boom, boom. Okay. So this is a W, guys. Now let's look for an M. Let's look for an M formation. Okay. See the market. Okay. Boom. 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 Let's see. Let's look for an M, like a really good solid M. Maybe you could find it on the hour chart, because again, longer time frames. Okay. Okay, here we have a it's this is kind of like a nasty M. You know what I mean? It's like a little sloopy M. Okay. Boom. And then boom. Okay. This is I don't think this is a good one. Let's see. Trying to look for a solid one. We need a solid M, guys. I take high probability setup, so I'm always gonna take the best M. This is pretty good, okay? So price shoots down, comes back, Okay. This would have been a little bit of a confusing formation to get in because you would have saw this shot down and would have came back up. People would have freaked out and bought. But meanwhile, it would have really shot down. Do you see the psychology behind trading? How like these guys just trap traders? People don't realize like Forex is a decentralized, it's pretty much a decentralized thing. So the structure of it is retail traders. You got mini banks, major banks, minor banks, hedge funds, institutions, and then you got the central banks on the top. And on top of the central banks is the BIS, which is the Business International Settlement. And you are trading against all of these guys. So don't think it's just, you know, people think, oh, when I hop into Forex, you know, it's just me trading. No, you're trading. You're on $1 trillion industry, okay? Forex is like $4.5 trillion a day. We trade spot Forex, okay, which means we trade money on the spot. It's pretty much straightforward. You know, you buy, that's why you're able to buy and sell currencies so quickly. So when people say, oh, well, why is Forex more lucrative than stocks? You know, you just say, well, there's always somebody willing to take the opposite bet of your trade. And it's a $4.5 trillion industry. Out of that 4.5 trillion, we trade 1.4 trillion of that. Literally insane, guys. Like literally mind blowing. Every time I just talk about this, blows my mind. But let's see some other good entries that we could have got in at. Here, oh man, this looks a little wicked. I wouldn't have touched here. Okay, when you guys see wicks like these, stay away, okay? Stay away. This is pretty much like market makers pretty much trying to trap traders. So, you know, the wicks, these are also called shadows. They show you the highs and lows in the market. So the high was here at 1.14435. and the low was at 11392. Okay, so people would have took this trade and would have saw, okay, price went up, and they would have bought. They would have like, okay, I'm ready to buy. Boom. They would have hit your stop loss. You would have got stopped out. Same thing with sellers. Sellers would have put their stop loss. Let's say they would have put their stop loss here. The stop loss would have got hit. Boom. Sellers would have got capped out right here. Look how this candlestick is like evil, guys. Literally, like the most evil candlestick in the world. So I personally wouldn't have even touched this if I would have saw it moving like that. I would have got out the trade immediately. Let's see. This is not pretty solid here. Okay. Let's look for some other solid trends. Okay, this is pretty good. Look at this, guys. Okay. This is a super engulfing candlestick. So you could see this is clearly engulfing more than 6 candlesticks, more than 5 candlesticks. You go ahead for your buy, and you're in the money. Okay. And we're on an hour. Okay. So even here, you know, engulfing all these other candlesticks, go ahead and take your trade, and you're still going to be in the money. Now, people say, well, what happens if it moves back up like that? You know what I mean? As long as you get in at the right strike rate, right, and it doesn't move past, so let's say you got in here, okay? Let's say you got in 1.12926, and you take a sell here. As long as the market does not move up to 1.1296, I mean, move past 1.1296, you're going to be in the money for that trade. Doesn't matter if it moves sideways, doesn't matter if it moves up, doesn't matter what it does, as long as it doesn't move past that current strike rate. And you have to factor in the spread too. You know, so if your spread is like $6, you just kind of want to make sure that you get a really good entry, so that way you can cover the spread too as well. Okay. So the engulfing patterns, guys, those are powerful. Look at this one. This one's super powerful. You could have caught this trade right here. This is engulfing like every candlestick possible here. Boom, you could have got down for this sell right here and would have snagged some pips. And the market didn't come, but we're on an hour chart. So the market just was here for like hours, and it didn't come back up until here. Okay. So you would have been good for a couple of hours. You could have took this trade and snagged some pips. Okay. The engulfing candlestick, that technique is very powerful, guys. Like, don't sleep on it. Trust me. Even this one is valid. You know, you look at this one and engulfed all the other ones and then shot back down. Could have gotten this trade too as well. Here's another one. Engulfed all these other candlesticks. 1, 2, 3, 4, 5, 6. Boom, shot back up. So the engulfing pattern is a really valid thing to do on hourly time frames. Straight bars. Yep. Thanks, guys. Now, here's what you guys have to realize, okay? I'll tell you guys something else. It's not about trading all currency pairs. So, you know, I mean, literally, look at this. There we go in here. People get excited. They're like, oh my God, I could trade this one. I could trade that one. I could trade this one. I could trade. You want to stick to one currency pair. So trading a whole bunch of different currency pairs on your chart, you know, it's great. You know, you could snag pips. We're looking at different pairs, but you have to know the pair that you're trading. The way I look at it is when I'm trading Forex, when I'm trading oil, when I'm trading any of these, you know, commodities or indices, I look at them as they're my children, you know? And think about it this way, is if you had a room full of 6 kids, one's shitting on the floor, one's writing on the wall, one's, you know, picking his nose, the other one is, you know, crying, you won't be able to focus on all of them. That's the same way it is when currency pairs move. They all move a different way. Not all currency pairs are going to move exactly the same, you know? All of them move differently. They're way more lucrative. Like oil is going to move different from the Euro USD. You know what I mean? So Euro USD may be calm, the calm baby, and oil may be like the crazy wild baby. And you can't focus on both. You know what I'm saying? You have to focus on one. So imagine those 6 kids aren't in the room anymore, and there's just one child there. You'll be able to, whatever he's doing, whether he's shitting on the floor or you know, drawing on the wall, you're able to focus on that one child and see exactly what he's doing. And you'll get to study and know his movements a lot more because you'll be around him all the time, you know? So imagine you were in a room with him for 6 days straight, you know, or 10 days straight, or, you know, a year straight. You're going to be able to know his movements the same way you know your friends. You know, your friends have personalities, and the more you spend time with them, the more you'll know them. Well, the more you spend time with the Euro USD, the more you spend time with the GBP USD, the more you spend time with the AUD USD, you will get to see how these pairs move, and you will be able to master their movements. You will be able to move with them. They will become your children. You know what I mean? So that's the way you have to think about it. Don't worry about trading tons of different pairs. Don't worry about someone saying, okay, you know, I snagged 1,000 pips off, you know, the NZD, dude. You should totally trade the NZD. Stick to what works for you. One of my friends actually doesn't trade any other pair besides the Euro USD, and he's been trading for about 6 to 7 months and has made a multiple 6 figures. Like literally seen this guy make like 70K in a day. I'm like, dude, how did you make 70K in a day? Like, you've been trading for like 6, 7 months, and live. These aren't demo trades, these are live. And you know, he pretty much says, you know, I just studied the Euro USD, studied the way it moves, and you know, I know the way it moves, I know what it's going to do in the day. You know what I mean? And the more you know your pair, the more money you'll make. You know what I mean? When you make things simple, making money will be simple. Trading is supposed to be simple. It's not supposed to be complicated. Make things easy for yourself, guys. So master one pair, okay? And then you can move on to the next pair. And if you don't decide to move on to the next pair, use that pair that's consistently making you money. If you got on the Euro USD and it made you 6 figures in 6 months, you would want to keep trading that pair because obviously you know it. You know what I mean? Don't try to jump into a new pair and see what everyone else is doing. Focus on what works for you. Reason why 90% of traders fail 90% of the time and lose 90% of their money is because they're constantly focused on what works for other people. They see their friend says, oh, I made, you know, this much, I made that much, you know, have this new indicator. They're jumping from one shiny object to the other, thinking that their strategy doesn't work, that they lost. But it just because, you know, you lose on your strategy doesn't mean that it doesn't work. It just could be in a bad day. It could mean anything. You know what I mean? So keep perfecting your strategies and use what works for you. It's all about what makes you comfortable. So there may be some people who could, you know, trade on the 1 minute, but when it comes to the hourly, they suck. You know what I mean? So it's all personal preference, guys. Okay. Is there a specific pair? Is there a specific pair that's better than the rest? Like I said, you know, it's what works for you. You know what I mean? Some people may say, you know, oil is the best, and then they may be like, no, silver is the best. So, you know what I mean? Or gold is the best. You know what I mean? It's no one pair that is better than the other. There's different pairs that move a lot more than the others. You know what I mean? And in certain days too, like the Euro USD will move like 60, 80, or 90 pips, you know, compared to other days because the market movement is much slower. Like on Friday, you're not going to catch as many pips. Well, I caught 200 pips today, but that's off oil. But with currencies, you're not going to catch that many pips. Just because, you know, the market is slowing down and it's getting ready to go into closing, you know, closes at like 5 and then contracts are settling in, hedge funds are closing their position. You know what I mean? There's a lot of things that really factor into that. So Fridays isn't really a day that I trade except if it's oil, you know what I mean? Because 80% of the time I know what 80% of the time I know what oil is going to do. So on Fridays, like 80% of the time it'll drop. And the other, you know, 20% it'll shoot up. So today was one of those days where it just shot up, snagged 200 pips, literally amazing. I'm going to get into oil too after this as well, but going to touch up a little bit more on currencies. Is there any other questions that you guys have? Just put them in the inbox and I'll answer them. Okay. Oops, that was a total mistake. Okay. Now, okay, awesome. This is perfect. Okay. So I want to teach you guys also about higher highs and higher lows and lower lows, okay? So right here, we have a high, right? Not like a Snoop Dogg high, but a high, okay? Pull back, high, pull back, high, pull back, high, pull back, high, okay? And then drop, okay? Now, the higher highs, you guys could get in. So let's say this higher high happened, you know, you're going to wait for confirmation. Obviously, you're not just going to jump in on the first higher high. Wait for confirmation, okay? Pullback happens, okay? We're going to get in here on the third candlestick, okay? 1, 2, 3, 4, 5, okay? Engulfing all these other candlesticks. Look how valid that is, okay? Boom. Get in right here. Snag a few pips, wait for the pullback, pullback. Second candlestick, I would have waited. I would have got in here, engulfed all these other candlesticks, buy, okay? And then, boom, you could have got in on the drop. You could have took the sell for the drop. And let's say you knew, you just waited on this drop, comes back in, snag a few pips. Buyers could have got up here. If you would have put your stop loss here, it would have got hit. Stop loss would have got hit. No stop loss zone right here, guys. We're keeping it gangster. No stop loss right here. So I would have personally got in here for this trade, engulfed all these other candlesticks. Buy, okay? Would have bought, got out. I probably would have got out early just in case of like a U-turn. Would have got out early probably on this bar, honestly. And then I would have waited for the reverse, okay? Now, how would you know it's going to be a reverse? Notice this bar is closing in the middle, okay? Like these bars are like staircases. So, you know, boom, it's going up, it's engulfing the other bars. Boom, it's going up, it's engulfing the other bars. Boom, it's going up, it's engulfing the other one. But this one didn't engulf. This one came right to the middle. Price closed in the middle, right? So that's how you know, okay, well, price didn't close above and price didn't close below. Price closed in the middle, right? So chances are that it's gonna shoot down. So you could have got in right here at the close of this candlestick, right? If you just wanted to, you know, be hot shot. But I would have personally got in right here. This would have confirmed that the trend is going down. Boom, would have took that sell. And look at that. You could have gotten this sell. Look at that. Money right here, guys. Okay? So higher highs, okay? See this? This is a high. Okay? This is a higher high. Okay, so it just continues back up from the last high. Okay? Higher high. Then you got another high. Okay? Okay? And this is on a, I believe this is on a what? This is on a 1-minute chart. Okay, cool. Then you got a higher high. Okay? And another high. Okay? Then you guys got and you got the sell right here. Boom, sell. Okay? Then you got the buy confirmation right here. Okay? Buy confirmation right here. The sell right here. Okay. The sell right here. Look at this, guys. Like literally, okay? Like this is like money all on your charts. There's money to be made in Forex. You just got to find where it's at. High, all right? Well, let's scratch out this. Let's just say you didn't get in the high. Okay, boom. High, all right? Boom, second candlestick. Buy, okay? Engulfing candlestick. Buy, boom. Right? You're in there. Sell. You'll be able to sell right here. Sell on this engulfing candlestick. Who cares? If you see this, don't get scared. Do not get scared. Sell, okay? Price shoots down. Again, you're buying right here. Engulfs all these other candlesticks. See how valid this engulfing pattern is? Engulfs all these other candlesticks. Price shoots up. You get in on. You don't want to get on the sell because it could reverse. So you want to get on the sell at the lowest point. So right here, you could have gotten on the sell and still snag some pips. Because this is on a 1-minute chart, so chances are it's going to keep moving down. You know what I mean? Because the trend, you have to look at the overall trend, was up. You know what I mean? And look at this last spike. So that last spike was just like, some people probably held their positions here and then, you know, rocketed up. But me, I would have just, it's all patience. It's all a patience game. So, I mean, from here to here, from from here to here. Look at that. From here to here. Let's see. From here to here to here. Dude, this is like 80, 90 pips in just a couple of minutes. You know what I mean? That you guys would be able to catch, snag some pips, just overall in general. You know what I mean? I haven't added it all up, but I mean, that's what it pretty much looks like to me. So, I mean, you guys could have just stopped trading here. You know what I mean? You don't have to keep taking trades, because remember, the more trades you take, the more risk you take, okay? And here we go. Look at this. Boom. Drop down. Made a low, okay? Here's the low. Okay, guys? Made a lower low. All right? And then low. Okay? Then the low. Okay? So boom. Look at that. You could just higher high, sell, buy, sell, the low, get in for the low. Boom. Second lower low, third lower low. So the market makes that higher highs and lower lows, okay? If you guys can catch these, golden. Is there a specific pair? You the best. Do you? Thanks. Thanks, Lucky. Do you use Bollinger Bands or moving average? Guys, I don't use any indicators at all for this. This is straight, pure price action. No indicators, none of that. Indicators are going to throw you off. You know what I mean? You're not going to be able to trade indicators. You're not going to be able to trade properly because you're going to be looking at one thing and doing another. You know, so you're going to be relying off the indicators, or you're going to be relying off the price. And your indicators don't matter. Price is everything, okay? Everything that revolves around trading has to do with price, where the money is being moved. Your indicator could say the RSI is 80, it says sell, it says buy, it doesn't really matter. It's all about price at the end of the day, okay? Where is price being moved? How many pips should, I mean, you could use Bollinger Bands, by the way, or moving averages. It's all your personal preference. How many pips a day should be a goal, okay? How many pips a day should be a goal? Really depends on what you're starting on, okay? I'm going to get into that question afterwards. Actually, no, let's just get into that now. How many pips a day should be your goal? All depends on your account size, you know what I mean? So let's just do a little breakdown right here. Okay. Genetics. Hold on a second. Okay. Can you guys see my, can you see my screen, Darren, or not? Can you see my screen?
I don't see anything right now.
Okay, let me just try to pull this up. Are you guys getting some valuable information here? What do you guys think?
Drop some comments, guys. Helping out. I know I'm learning a lot. This is freaking awesome, bro. You're a beast.
Thanks, man. Okay. Okay, cool, guys. Here we go. So here is pretty much your risk.
Wait, I don't see you.
That you should be taking. Oh, shit. You don't see my screen?
No. There we go.
Really?
Now I see you. Oh, wait, no, I don't. Popped up.
How about now? Can you see it?
No.
You can't see it?
I don't see anything. I just see you. I see like your picture, your profile picture. Are you trying to screen share?
Yeah, that's what I thought it was. Now I'm more confident. Awesome, Keegan. Crush it, bro. Keegan's killing the market right now, actually.
There we go. I see it.
You got it? Okay, so, I mean, this is just you guys starting from 2,500. I mean, you don't have to start from 2,500. You guys can start from 500, even 300. But like I said, you guys always want to, you know, keep your risk short too as well. So you're at 2,500. Let's say, you know, you start with 2,500. This is accurate, okay? So this is how you guys can become a millionaire in literally a year, okay? So whoever tells you, hey, this is BS, be like, hey, you know what? This may be BS, but math is not. Okay, so this calculator is going to let you plug in the numbers to let you know your percentage of how much you would make if you compounded 2,500 for a year straight. So, you know, it's like somebody coming up to you and say, hey, I could write you a check for $1 million, but there's a chance I might void that check. Or I can teach you how to double a penny every single day until the end of the month. Which one would you choose? Obviously, you're going to choose the penny because there's no chance of me voiding that. You know what I mean? And not to mention, you get to learn a skill set, and it's compound. So you know, you'd make a lot more in the long run. So start with 2,500, 5%. That means you got to make $125 a day. Okay, there's 20 days in a trading week, in a trading month, because Saturday the market is closed. Okay, 2,500, you make $125 a day. Your balance at the end of the month is 5,000. 5% of 2,500 is 125. $5,000 on the second month, you're at 250 a day. Okay, so you do 5% of 5,000 is $250. That's $60,000 a year, guys. $60,000 a year. Your balance at the end of the month is 10 grand. Okay, on your third month, you're at 10 grand. Okay, you're making $500 a day. Okay, $500 a day. Your balance at the end of the month is $20,000, guys. This is in 3 months. Okay. This is in literally 3 months. People make this money in a year. You guys are making this in 3 months out of the gate. $500 a day, okay? And I'm gonna get into the pips, okay? $20,000 on your fourth month. You're making $1,000 a day or $40,000 at the end of the month. You're in Darren Fryer's level now, guys, okay? You're at $40,000 for the fifth month. You're making $2,000 a day. You're at 80 grand, okay? In 5 months, guys. It's all patience. 80 grand on your 6th month, you're at 4,000. You got to make $4,000 a day for 20 days, $160,000 at the end of 6 months. Okay. On 7 months, you're at 160,000. I'm teaching a webinar of people. You're at $160,000 on your 7th month. You're making $8,000 a day, guys. That's 320 grand at the end of the month. You can retire you, your next door neighbor, and the neighbors across the street. Okay, 320,000 on your 8th month. 320,000 on your 8th month. You're making $16,000 a day. You're at $640,000. Okay, guys, you are literally a 6-figure earner in 6 months. 6 months. Okay, you're half a millionaire in about a good 8 months. Okay, it takes people years to hit. And some people don't even make that kind of money. Okay, guys, a company may make $100 million in a year, but we've seen traders who make that in a day. Okay, now you're in your 9th month. You're at 640 grand. In 9 months, you're making $32,000 a day. Can you guys imagine bringing in 32 G's a day? Okay, that's literally insane. Okay. And it could take one trade. All it takes is one good trade, guys. One good trade. You're a millionaire in 9 months. You're at $1 million, 280,000 on your 10th. And this is factoring in if you lose trades. This is not even factoring out, like, you know, if you're just 100% accurate. This is factoring in if you lose trades. That's the crazy part about this. Okay. 2,500 to $1 million. Let's go. You're at 1,280,000 in 10 months. You're making 64 grand a day, guys. 64 G's a day in your pocket. $2,560,000. Okay. 11 months. You're at 200. Even if you're making like 2,000 a month residual in WG, if you guys can do this, you guys are technically like way past ranks. $2,560,000. $2,560,000 on your 11th month. You're making 6 figures a day, guys. Who wants to make 6 figures a day? Come on, guys. We can make 6 figures a day. $128,000. You're at $5,120,000 on your 11th month. On your 11th month, you're at $5,120,000. You're making $256,000 a day. $10,240,000. Okay, guys. $10,240,000. Let's go, guys. Let's do it. Okay. this is definitely possible that you could be a millionaire in the next couple of months. I'm definitely going to be seeing a couple $1 million, which is pretty crazy because I'm a living testimony of hitting 6 figures. Tons of my friends, tons of my students who have trained have living testimony of hitting 6 figures, and you can do it. There's nothing that separates you from me, guys, except for time and except for your effort. Okay, you put in the effort, you will reap the rewards. And this is starting from 2,500, bro. Starting from 2,000, you could start from 500, guys. Start from 500, plug in the numbers, you'll still be a millionaire. You could do 3%, you'll still hit 6 figures. So no matter how low the percentage is, you're still going to make money. I mean, if it's 1%, it may be fairly low, you know what I mean? But if you do 3% to 5% a day, guys, just with 500 bucks, you will literally crush it, okay? Yeah, this isn't even a question. Like, let's do this. Like, who doesn't want to do this? 5% profit, guys. Let's do this. Like, we could definitely crush it. Right? I'm going to take off this sheet here. This is a proven sheet that you guys can become millionaires. Do 5%. Do it on your calculator, anyone's calculator. Doesn't matter if you're a mathematician. I don't care if you went to Harvard 100 different times. These numbers are real. These numbers are facts. I can plug them in and show you different numbers. And you know, you guys can make it happen. So let's do it. Let's hit 6 figures. Let's hit $1 million, guys. This is Forex trading. This is Forex trading, guys. It's all about catching pips, okay? Pip and dip. Pip and dip, all right? Now, this is proper risk management. Becoming a millionaire with proper risk management. Can you imagine if you guys did 10%? Here's the thing. Here's what you have to guys realize of how amazing this opportunity is, okay? Let's say, you know, I got you guys. Send us a sheet. I got you guys. Let's say you're doing 2,500, right? And you're setting your stop loss. You know, you're setting your stop loss of where you're only losing 5%. Okay. So you could, because in, you know, Forex, you can manage your risk. So let's say, you know, your market's at 1200. You set your stop loss 12005, whatever. You know, you set your stop loss. To hit your stop loss, you lose 5% of your account, right? Now, here's the thing. You could always make more of your account, guys. You could manage your risk to lose 5%, right? But you could always manage your risk to make more. You could set your stop loss at a lower strike rate and then set your take profit way higher. So that way, if the market goes against you, it's like, cool, I lost 5%. But if you put the take profit at 80 pips, it's like, okay, cool, you know, I made more than 5%. So you could always make more than 5%, okay? But never lose more than 5%. Think about that, guys. So you could exceed your goal if you're on $2,500 and you make more than 5%, you make, you know, $300. Stop trading. Do not continue to trade. Okay, guys? You taking more trades for the day doesn't make you a better trader. Hop on demo, you know, and, you know, do trading there. Okay. And even then, when you're on demo, treat your demo account as if you would treat your real account, because it's all about mentality. Most people start with a demo account with $100,000, $200,000, and their mentality is, okay, well, I can make a lot of money. Look at these lot sizes. But when they go on a $1,000 account, they blow their account. Why? Because they set themselves up for unrealistic expectations that they're not ready for yet. So what you want to do is you want to open up a demo account with $1,000 or $2,000 and train your mind to be more realistic. So that way, when you make $100 profit, when you guys make $200 profit, those numbers are more realistic to you and you're not taking bigger lot size. People will jump on a $100,000 account, take a 10 standard lot size, jump on a regular, $1,000 account, max out their leverage 1 to 1,000 and take a freaking 2 standard lot size on a $1,000 account and blow their whole account. Okay, set yourself up for realistic numbers. Start your demo account with $2,000 and then work your way up and then work your way up. So you start with 2,000, 5, 10, 15, 20. Then you say, man, you know, if I could turn 2,000 into 20 grand, imagine what I could do with 100K. You know, you have to train your mind to say, don't start a demo account with 100,000, 50,000. Start your demo account with $1,000 to $2,000. Okay, nothing less, nothing more. If you guys do that, if you guys do this, you guys will be profitable traders. You guys will make money. Okay. Now let's get out of this sheet. Okay. Oh, that's me. Okay, I'm at Starbucks, guys. Can you talk lot sizes? Right. Okay. Actually, you guys want to go back to that sheet? Okay, you guys want to go back to it? Cool. Okay. Lot sizes. Right. Okay, so you're on a $2,500 account. As crazy as this sound, guys, I would be taking a 0.50 lot, which is half a lot, okay? So 100 is going to be A full standard, okay? It's 100,000 units, guys. 100,000 units. Power of 5, let's go, baby. 100,000 units, okay? That's $10 per pip. So if the market moves 100 pips, you'll make $1,000. But you guys just don't have to do that in currencies. You guys can do that off oil. Okay, guys, you guys can do that off oil. Dude, oil moves 500 pips a day. I at least catch 100 pips on oil a day. So I'm going to be trading with you guys. We're going to be catching 100 pips a day on oil, racking out. Okay, me, you, Darren, our whole team in Founders Legacy is going to be one of the most profitable, well-trained teams in the business, guys. Okay. Now, but what you want to do is on a $2,500 account, you guys want to do, okay, 0.50. Okay, 0.50 is what I was learning is that the market maker ignores the demo account. What's the difference between trade and live with a market maker? 0.50. Okay, 0.50. That's half a standard, guys. So instead of $10 per pip, it's about $5 per pip. Okay, and you could do 0.40, which is $4 per pip. You know, and that's still great, guys. Think about it this way. Let's say you just did $4 per pip, okay? So you did $4 per pip. Let's put on this calculator. $4. 4 times, let's see, 4 times 50. 4 times 50. The market moves 50 pips. That's $200 for the day, guys. 200 bucks for the day. You guys exceeded your daily profit goal. You know what I mean? So if you guys want to catch 10 pips, right? If you guys want to catch make $125. The perfect lot size to do that on is, okay, let's just say we did $2 per pip, okay, 5, okay, times, oops, 5 times 20, 5 times 25, oops, 5 times 25. So you guys want to catch 25 pips, okay? 2,500. You start with half a lot, okay? 5 times 25. That's going to be $125. So you catch 25 pips to make $125 to exceed your daily goal, okay? 25 pips is nothing, guys. Literally, like 25 pips is baby movement. The market will just have to move. 20 pips in Forex is nothing. It's a $1.4 trillion industry. You guys don't think you'll catch 20 pips? Come on, guys. Especially on oil, we'll crush it. So 25 pips a day for 20 trading days will leave you at a balance of 5,000 at the end of your month, at the end of the month. Now, even if you're on this chart, right? Even if you're at 5,000, right? And let's just say you did a 10 standard, right? And you did 10 standards, you know? Okay. Okay. So you did 10 standards, all right? Hold on a second. Okay. Okay. Even if you guys did 10 standards, okay, and you caught 10 pips, that's $1,000, guys. $1,000, okay? You guys can do pip and dip. Grab some pips, put some big lot sizes on it, and then get out of your trade. You know, you don't have to catch 100 pips, 1,000 pips. You don't have to catch those many pips to make big money. Imagine just doing 20 standards or 30 standards, right, on a 10 pip trade. You're gonna come out with racks just from a small movement in the market. Always, you guys want to have risk management, though, of course. But I mean, if you guys are really surefire about your trade, you guys can also do that too as well. It's another way of looking at it. All personal preference and depends on the account size that you're actually working with for you to do like pip and dip. Whips and pips. Yeah, whips and pips. Whips and pips. Pip and dip. Yeah, whips and pips. Let's get it pipping. Yeah. So what I was learning is the market maker ignores the demo account. Yeah. The market maker will ignore the demo account because, I mean, just getting into that is like super complicated to talk about the background, but these guys run a huge room of market makers who really just try to screw you guys over. Demo accounts are not going to really, I mean, it doesn't really matter. You know what I mean? Of course, you'll get like you still could get whipsawed. You know what I mean? Whatever happens. You're going to get whipsawed regardless. New movement. Yeah. You're going to get whipsawed regardless if you get whipsawed, but the manipulation is a lot more realer on a live account than it would be on a demo account. Demo account and live account are technically the same thing. It's all about mentality when it comes down to trading. You know what I mean? I suggest that you guys start off with live because that way you get to know how it feels to lose. You guys set yourself up for that emotion. You know what I mean? Because you go on a demo and you lose and you're like, oh, I didn't feel shit because I didn't lose real money. You know what I'm saying? But when you set yourself on a live account, you'll start thinking, oh man, what did I do wrong? You know what I mean? A lot of things will click more to you. And I also have a friend, you know, he's not very a profitable trader. And he says, you know, well, I took a loss, and he gets depressed about the loss. But here's the thing. If you guys realize it's not about winning in trading, it's not about losing in trading, okay? It's about making money, all right? You could lose a trade. Does that mean that you suck? No, it doesn't mean that you suck. You could lose a trade, but it's all on how you take it. When you lose a trade, if I lose a trade, I learn something new. I write it down. Okay, I lost this trade because of this. My emotion was this. I record myself. I record data of myself of how I feel entering the trades and why I took the trades, writing a journal. So then when I go back, I'm like, I'm not taking that trade. I felt that same way before and I messed up. You know what I'm saying? And then I write trades that I feel confident about. So when you lose a trade, you learn something. When you win a trade, you learn something. Either way, you're going to learn something. It's all on how you take it. So from the losing perspective, you're still winning. And from the winning perspective, you're still winning. So either way, you can't lose as long as you learn something from either or. You understand that? So you got to take everything with a grain. The plan on the weekend. Okay. Yeah, you got to take everything with a grain of salt. So when you lose, right, okay, I felt this way. I lost because of this. I entered this trade because write down every single thing of why you entered that trade. Because you may do it again. All right. But the second time you may blow your account. So you want to write down every single thing. Did you mention what leverage we should start off with? Yes. Leverage that you guys should start off with that I totally recommend as new traders is 1 to 200. That way you'll be able to manage your risk because they're not going to let you take a one standardized lot size. You know what I'm saying? With a small amount of leverage. Only thing that leverage does for you guys, it just gives you the position to open up bigger trades. You know what I mean? Bigger lot sizes. So you could have a small account and just open up, you know, a 2 standard or a 5 standard, you know, with, you know, $500 to $1,000. Okay. So leverage, you guys should start off with 1 to 200 and then boost your way up to 1 to 500. If you guys have a fairly nice account size, 1 to 500 is perfectly fine. You don't want to get margin called out of your trade though. You know what I mean? Because if it goes against you, it's a double-edged sword. You know, leverage is good and leverage is bad. You know what I mean? So if your trade is going against you and you get margin called out, that's it for you. Okay. So this is a sheet on how to become a multi-millionaire in literally a year, guys. I mean, just that for me personally, you know, if I were you guys at my 5th month, I probably would have quit the job that I'm not working a job now, but I would have quit at the 5th month making $2,000 a day. That's literally insane. And some people, you know, they won't make it past this whole thing. The thing about it is their mentality, okay? The mentality is what stops them. So they'll go, oh, 80 grand, man, you know, like that's not enough. And then they'll put bigger lot sizes on and then they'll just screw themselves over. Not only do you want to make 5% of your account every day, you also want to withdraw when you make profit. Why do I say? So let's say you started with 10 grand and you made 25 grand. You want to withdraw that profit that you make and start with the initial capital amount, right? So people say, oh, Dimitri, look, why don't you take, you know, big lot sizes and all of this with, you know, your $100,000 accounts? Because I'm not an idiot. So I'm going to withdraw that money, keep it in my account, because if the money is in my bank account, the market can't take my profits. So I'm just going to start off with initial capital and build up. That's why I could turn $200 into 10,000, 10,000 into 20,000, and then boom, I withdraw and then start over again. You know what I'm saying? I'm still making money. Doesn't really matter. I'm still making money. It's just a compound effect. So always, when the market gives you profits, take it and put it in your bank account. Because when it's in your bank account, right? When it's in your bank account, what happened? Okay. When it's in your bank account, the market can't take profits from you. So anytime you make a profit, boom, withdraw straight to your bank account. You're good. Solid, everyone? So I'm going to give you guys this sheet. And anyone who's on this webinar right now, yeah, I'm going to be working with you. I'll be giving signals for WG every other day if I have to for oil. And I want to get you guys to 6 figures in 6 months. So let's start that movement, 6 figures to 6 months. And then from the next 6 months, hopefully you guys will be $1 million Forex traders and, you know, traveling the world and, you know, doing what you love the most. Now I wanted to touch up on you know, trend lines. Oh shit, sorry about that, guys. Okay. There you go. Boom, boom. Okay. Okay, cool. All right. All right. Now, a trend line must respect 3 or more lines. Okay, 3 or more lines, 3 or more highs, actually. Okay, the highs and lows. Okay, so it extends from the future to the past. Okay, so boom, boom, boom. I mean, you can miss here by a couple of pips if you wanted to, but let's say you want to get in on this line. Boom, still a valid trend line. Okay, and what I like to do is I like to change the color to here. I like to make it a little, you know, bigger. With that, call it the golden trend line, the Zeus trend line. Okay, so price respected here, respected this line, drop down. So you get to see where the market is moving, right? Price came here, hit this line, drop down. Price came here, hit this line, drop down. That is called a trend line. This is a solid trend line in a downwards movement. So you guys can see the lower lows, right? And you guys can see the higher highs. So boom. Once you snag this, make a couple $1,000s right here. Come back up, boom, sell, right? Want to wait for the market? Come back up, sell. Come back up, sell. So you guys can just set a take profit right here. Once it hits this take profit, boom, you know, for a buy, boom, you're ready to go. And then you can set your another take profit here for a sell. And then when it comes back up, take your take profit here, buy at the bottom, take your take profit here, and then you could go for a sell and then do another take profit. So that way you're in and out of your trades and you're managing your risk and you're crushing it, okay? This is a trend line, okay? Now let's do another trend line, guys. Another trend line, all right? Okay, here's a fire trend line, guys. This is literally, look at this.
Oh, I'm sorry.
Nah, no one can see you, it's fine. No, they can't see you, okay? This is another trend line, okay? It respected 3 or more line, 3 or more highs, okay? You don't want the trend line, you don't want to force a trend line, so you don't want it to be like that. Now it's not valid. It can't touch the body of the candlestick. The trend line must, let me pull this back. Oh my God. Okay, here we go. The trend line must respect the lines, okay? So you guys can do it like that. Okay. I don't know what's going on. Okay. And you guys could add alerts to this, which is pretty cool. So when it hits, you add an alert. I don't really have my shit up, but if you add an alert, it'll hit here, and then you'll know when to get enter and out of the trade. So here would have been a solid trade. Look at this. Okay. Oh no, ignore that, guys. Sorry about that. Oops. Okay. Here, look at this M formation. Boom. Get in for a sell. Price is gonna come back up here. Remember, we would get on the engulfing candlestick right here. Price is going to shoot up. Buy, take profit. Set your take profit right here. So that way you're out of the trade instantly, just in case it breaks out, okay? Then when you get in for a sell, you could take another sell here. This is a little pullback. Sell, wait for the market to respect this line again, and then sell again. And then it's always on the third sell. So this is kind of like a lower low. Always on the third hit that appears is the biggest pips that you could catch, because the market has to move, you know what I mean? So if it doesn't break here, know that it's going to go down this line. So it's kind of like a slide, you know what I mean? It's kind of like a slide. It's just sloping down like, and then you're good. So this would have been a great trade. I mean, you guys could have just made a couple grand off this from a half standard lot. Just coming up off this, depending on what time frame it was on. If it was on an hourly time frame, you would have crushed it. Okay. Now, there's also OLC bars, which is pretty cool. I like these bars. I use them sometimes. These open and close bars, though, they look kind of gross, right? I know. You guys are like, nah, F that. Like, let's get some Heikanashis.
Yeah, I saw.
Okay. So yeah, now you guys know how to draw a trend line. Okay. And you guys can do trend. Look at that. Oh, look at, why is the trend line just like it doesn't even show the candlesticks? It's mad weird. Oh, here we go. Here's the thing. Here's what I was talking about the line chart, guys. Okay. So let's say you guys feel like you guys can't, it feels weird for you to plot the trend lines. Here's what I do. Boom. Go straight to the line chart. Okay. And look at that. I'm able to connect it with the line chart. You can connect your trend line with the line chart because it shows you the highs and lows. There's no body of the candlestick interfering. You know what I mean? So you'll be able to catch it way better. So check this out. Oops. That was my mistake. Okay. Okay, so let's just say we got in here. So you guys get, let's say you just got in here. This is cool because this already broke here. Okay. So boom, boom. Oh, you want to look here? Boom. Here, boom, boom, boom. So you guys see like the highs, the little points of it. You guys can get in on these little points, like let it hit here, boom, boom, boom. And it's not interfering with the body of the candlestick, so it's easier for you to plot. So then now, when it's time for candlestick time, let's just say, you know, we did it up here, you know, for just talking. Actually, no, let's bring it back. It looks way more valid like that.
Well, you know what they did.
All right.
School, I mean, went to work. I didn't do anything.
Now let's say you go back to candlesticks, Aikanashi. Boom. See how on point it is? See how valid it is? It catches the wicks because the line graph is going to show you the highs of the market. So it'll just catch these wicks. All right. Now, as long as price is not breaking, if price breaks past this trend line for a buy, like if a green candlestick comes past here, then you guys are confirmed that it's going to go up, but it shot down. Okay. And then it came up later on.
Hey, what's going on?
Risk management. What time chart? Let me see. Oh, risk management. You rock. Let's go down for the squad. You rock. Dimitri is a boss. Fun life. Oh, thanks, guys. You guys are awesome. I love you guys. Looking forward to working with you. Thanks, brother. So you started with, you never trade more than 2,500. No, you guys can start with lower than 2,500. I literally took $200 and turned it into like $11,000 in like a week. Okay, so you guys can start with whatever you want. 5%. Bye. See you later. I get that, but I mean with that much in your account, risk management. What time frame? Minute? No, you guys don't need to do the minute time frame. Oh, that was the minute time frame I was on. Hold on a second.
Hey guys, I'm fucking stoked. I don't know how you guys feel. You guys been
Hello?
Almost an hour and a half, bro. You're crushing it.
In and out on your face. In and out on your face.
Yeah. Let's just go look at one more thing, guys. Okay. Entire screen. All right. Boom. So you guys see this trend line. These are the golden trend lines. Only Founder's Legacy does golden trend lines. Okay. So you guys are able to see pretty much just how the market works. This is all price action. I'm not using any type of indicators whatsoever, guys. Okay. Look at that. Look, check this out. Boom. Okay. Trend line game on fleek. Okay. Boom. Missed here. Boom. Shot here. Came up. Look at this trend line right here. Boom. You could have caught it both ways going down. These are like parallel trend lines, right? You can break through here. That's fine if it breaks through here. Like, don't even worry about it. As long as it's, you know, it's in a consistent downtrend, you're valid. So boom, you can catch it on both sides. So boom, it breaks here, comes here, comes here. You know, you're trapping price. Comes here, right? Then you could take a buy, comes here, breaks through, hits this line, drops. And once it breaks past here, you guys could take the sell. Drops on this sell, okay? Then we come here, comes back up to here, drops, comes back up to here, drops, come back. And you could just extend this forever, guys. Extend it forever, all right? As long as you want, as long as it's connecting. Look at that, and then boom, just get in for the drop. Now, I'm like a seller. I like to sell more than I buy, and the reason why is because, think about it this way. When you buy, and I'm gonna use this as an analogy with regular candlesticks because it makes perfect sense. When you buy, everything is kind of choppy, right? So think about buying as like climbing up a mountain, right? If you climbed up a mountain, you would be tired as hell. It's the same thing with the candlesticks, you know? They go back and forth, they get choppy, they get tired, right? Because they're going in and out. But notice when you sell, right? It's a lot easier. So climbing up a mountain is hard, but how easy is jumping off a mountain? Pretty freaking easy, right? And that's why I love to sell, because look at the consistency in the downtrend. It just consistently goes down. It's not really too, you know, choppy, 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 up, down, pull back. You know what I mean? So sells are really strong. Sellers have more power in the market than actual buyers, I believe. It's because it's all supply and demand. So think about it this way. Buying is like climbing up a cliff. Selling is like jumping off. So you always catch really good trades if you sell. Now I'm going to go over one more thing to factor in, and these are called magnet levels, just so you guys know. Okay. 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 Loading data. Okay. Okay. Boom, boom. Okay. Okay. I mean, I'm just plotting these because I'm just so used to like plotting them the way I plot them. So you guys are like, oh, he's like plotting random lines. But I mean, I know you guys know what support and resistance is. And if not, I'm gonna go over that. Okay, support is your floor, resistance is your ceiling. Okay. Now remember I was talking about levels. What you guys can do is, right, what's cool about this is you guys can set alerts on your chart. Okay, an alert. You guys got to sign in, sign up. Okay, you guys can set an alert on your chart, so when price hits certain levels, you know when to get in and get out of the trades, which is pretty awesome. So you could set an alert right here for a sell, because you saw in the past price was at this same exact level for a sell. Okay, and then when it hits that alert, you don't have to stand in front of your computer all day and you're game to go. Okay, now let's do this. Okay. Okay, like I said, the market has memory, guys. Okay, so you can get a clear idea of what the market's done on certain levels, right? So at this level, it shot down. Look at the strike rate. So this exact strike rate, it shot down. On this exact strike rate, it shot down. On this exact strike rate, it shot down. Even here, even as it was continuing in the trend, it shot down on this exact strike rate. Here, it shot up because it had to go up to go down, obviously. But you can see through these consistencies, it was a prevailing downtrend. Plus, it hasn't gone past this level yet, which was the last level it was at was here, which is 13515. So didn't break past this level, just kept making lower levels. So you can just tell from here, this whole downtrend would have been a sell. Okay. Now you guys can predict what's going to happen next. Okay. When you think the market is going to break up or break down. I personally think that euro dollar is going to go for a short, because I was looking at that on the daily chart. But yeah, okay. So these levels are just going to show you where price was at before, okay? Now, and price always comes back and does the same thing, okay? So let's see here, okay? This is like kind of a, and when you see the levels not appear on here, that means that price didn't hit these levels at that day and time. So see, I just stayed in the zone, sell. You could just been like sell. Man, imagine catching this candlestick, guys. Sheesh, this would have been an awesome downtrend to get in on, okay? So when you plot these levels, guys, let me do like a 15-minute chart. 15-minute charts are the best to look at, in my personal opinion, because they show you entry points. Okay, like really good entry points. They allow you to take really good entries. Okay, data loading. This data is just loading. This data is loading. This data is loading. Okay. So price came here, shot down. Came here, shot down, came here, shot down. Look at it, came here and bounced back up, came here and bounced back up. What did it do here? It came here and bounced back up too as well. Okay, here it didn't bounce back up because as soon as you saw it break past this line, you wouldn't want to have taken this for a sell. I mean, a buy. So you would have been like, okay, the confirmation is valid that it's going down for a sell. The price came here, shot up, Price came here and shot up. Even just catching these little moves is a lot, guys. Price came here and shot up. Price came here and shot up. Okay, now what did price do here? Okay, so price was opposite on the reverse side. Then on the sell side, it's going to be on the buy side now. So even here, look, price came here and then dropped. Price comes here and then drops. Now price shoots up and then it's going to drop. Check out the euro dollar. Okay, now it's going to come back into one of these levels. So depending on where you set your levels, right, of certain parts in the market, right, like higher highs, lower lows, or even a good, area of where you see a significant bounce on the trend, you can set your levels there, set an alert. Once it gets to those levels, you could sell or buy, and it makes trading a lot more easier. Look at this. Boom, sell, boom, sell, boom. Even here, a few micro pips away, sell, and you would have been good on that trade. Look at that. Buy, 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 buy. Like they all are just like buy, you know what I mean? You're on point with these. So set magnet levels, guys. I'm going to go over that in another webinar with you guys. For now, I got to go. Really just want to thank Darren for getting me on this webinar. Glad that I got to throw down with you guys. Let's snack some pips, make some money. Hope to help you guys hit 6 figures. I'm going to be giving out signals to each and every one of you. I'm also going to be offering one-on-ones that you guys can personally do with me. But I mean, essentially, like me and Darren are going to be, just teaming up, and we're going to be crushing these webinars back to back. So anything new that I learn, anything that I find in the market, I will come back and I'll tell you guys. And next webinar, we're probably going to have a live session, a trading session where we'll be able, because the market is closed right now, but we'll be able to take trades, guys, and make money together on the next webinar, giving out signals. Probably call out a good 5 signals, and let's get like 300 pips for the day, bringing a couple $100 to $1,000, depending on your account size. But let's definitely do that the next webinar, and I really appreciate you guys, and hope we could just team up in the future, and Founder's Legacy is everything.
Sounds good. Dimitri, you're the freaking man, bro. Thank you so much. We'll do the webinar next week on Thursday. So that way the market will be open. And I'll be back in Oregon. So, yeah, bro, have a good day out there. I'm going to go catch some sunlight since it's still daytime over here. And I'll post up the recording for this webinar on the group page when it's processed. So I'll send it over to you, man. You're the freaking homie. Killed it.
Thanks, bro. I really appreciate it. Thanks, guys, for having me on this webinar. I'm going to go out, get some drinks with some friends, and toodaloo. We'll catch some pips Monday.
All right.
All right, later.
Be like, you want to be a boss? I'm like that.